Hi, I'm Donna Robinson, and this is an introduction to real estate investing fundamentals and strategies. It's all about investing because nobody ever buys or sells their home with the intention of losing money. So even if you're not a real estate investor per se, you are a real estate investor if you want to own a home or if you currently own a home. But especially if you're thinking about buying a home, it's not about whether or not the market conditions are good or bad. It's really about being a smart investor. The importance of real estate investing goes way beyond what most people think about. It helps to stabilize your income, especially if you're getting up in years and you're worried about retirement income over and above Social Security. Or maybe you're like me, you don't even expect Social Security to be there when you become eligible for it. Real estate investing can help you stabilize your income. Homes are an essential need. They're something everybody's always going to need. They're not going to go away. People get tired of a lot of things that happen and products come and go, but homes will always be there. There'll always be a need for shelter. Homes are a hedge against inflation. When inflation gets worse, homes go up in value. And even though homes have gone down in value in the recent history, that's not because there's a problem with home investing itself. It's because the market got overinflated relative to the supply-demand issue. Homes don't lose their value like stocks can. Even though we're in the midst of what is supposedly defined as the worst real estate market in the history of the country, the bottom line is that the price of most houses hasn't gone down all that much. We've seen Enron stock lose all of its value. We've seen a number of companies go completely bankrupt and their stock is left worthless. But that doesn't generally happen with homes. And also, home value manipulation is difficult. And obviously, if it were not difficult, the government would have already inflated home values right back to where they were prior to the housing market crash, because frankly, that's certainly where the banks would like to see it. So this just goes to show that home value manipulation is different, unlike the stock market, where, again, Enron's a perfect example. They used the news media to give out false information and falsely inflate the value of the stock. You can't do that with home prices and home values. So homes, in my opinion, real estate investing and home ownership is one of the most important things that you can do as an investment hedge. One of the key things that you never hear anybody talk about in a real estate investing seminar is the fact that fundamentals dictate strategy. I've been in the real estate industry for over 16 years now, and I've seen it all. I've been a real estate agent. I've been an investor. I'm still an investor. I've had small commercial property. I've dealt with thousands of houses over the last 16 and a half years. And I can tell you that when you go out and learn a strategy all by itself, you tend to find yourself very confused. When I first started out, I spent a lot of money on a lot of real estate investor courses and still couldn't figure out why I couldn't put those pieces together. And the real fact of the matter was that I wasn't learning the fundamentals, I was just learning about a given strategy. So it's fine, we all get intellectually that buying a house for one price, or say buying a house for 10 grand and then selling it for 20 grand, we're going to make some money. But at the same time, learning that whole idea doesn't teach you anything about what it takes to get there, what kind of house you've got to look for, and what kind of fundamentals you've got to have in place to make that work. Because while that's an ideal strategy in some cases, it doesn't work on all houses. So what you have to do to determine your success or failure is to focus on those fundamentals. Because just like the big housing market crash we had in 2008, fundamentals support a given strategy for a given period of time, and those fundamentals change over time. And that results in a change in your strategy. There's a lot of documented history of folks who taught very well-known strategies whose strategy stopped working. For example, when you have high interest rates, one type of strategy works in a high interest rate environment, but when interest rates are low like they are today, that strategy doesn't work very well at all. So strategies have to change over time because your fundamentals change over time, and the fundamentals will either support or undermine the strategy Therefore, they dictate what strategy you have to choose going forward. Now, your mission as a real estate investor is to research the fundamentals on each property and then choose the strategy that best fits those fundamentals, because again, fundamentals dictate the strategy choice that you want to make. Now, the most common question is, how do I know what strategy will work in my area? And the answer to that question is, check the fundamentals for that area. Now, there's two types of fundamentals. In this particular video, we're going to talk about property fundamentals. And in a follow-up video, I'll be talking specifically about market-based fundamentals. But right now, we're going to focus on fundamentals as they specifically relate to the property itself. Property fundamentals include things like the location, the condition, the existing financing, the buyer's financing options, seller's motivation and what the seller needs to get out of a particular transaction, the real-time market value, which is the after-repair value with a little bit more qualifying behind that. And the fundamentals for each property will vary from property to property because the plain fact of the matter is every property is somewhat different. Location is one of the most key fundamentals. And by the way, let me just say fundamentals are those things about a transaction, about a property that will not change. As a real estate investor, you'll have a certain set of fundamentals that apply to each property, and you have to work with those fundamentals. You can choose from a variety of strategies, but the fundamentals will not change. You can't choose the location of a property. The location is what it is, and that's what fundamentals are. Excuse me. Fundamentals are things about the property that will not change. Now, location is one of the best known fundamentals. Some locations hold their value better than others. Areas with strong employment, areas that are closer in right now because of the impact of gas prices. As gas prices go higher, properties that are closer in to employment centers and major cities are going to tend to hold their value better than properties that are way out in the outlying suburbs. And good school districts are one of those issues about location. If a property is located in a particularly good school district, that is generally going to result in much better demand for that particular property. And when you have a lot of good, strong demand, you're going to have much better price value. Condition is also a very important issue. And the condition, again, is what it is. So it's a fundamental. And for investing, poor condition is often an advantage because you can use it as a negotiating tool. And so therefore, most investors tend to look for properties that have at least some degree of problems. Generally, the better condition a property is in, the higher the cost is going to be to buy that property. And so for investors, most investors like to look for properties that have anywhere from a little bit of poor condition. As you can see in this particular photo right here, some worn paint is not that big of a deal. On the other hand, a kitchen that's in really rough, outdated condition, as we see in this photo here, often can result in the price of the property being reduced by thousands of dollars. And this kitchen here in this photo doesn't look so bad, but it ultimately needs a lot of updating to bring it up to current standards. So condition issues are an important fundamental factor as well. Existing financing is a fundamental that you don't hear a lot about in seminars. The bottom line is you need to know what the seller owes, what kind of financing they have on the property, what's their situation. Is there a possibility that you can buy that property subject to the existing mortgage? That's a very popular topic among folks who want to buy a property without having to qualify for a mortgage. But it doesn't make sense to take over a property subject to the existing mortgage if the seller owes a lot more than the property is worth. There are some cases where you can do something about that, but as a general rule, if you just go in and take over the existing mortgage when the seller owes more than it's worth, the average investor's going to get themselves into a bad situation. And then, of course, does the property have a lot of equity? These are just a few of the basic questions about the situation with the existing financing. But again, that is what it is. It's not something you can change. It's something you have to look at and work with, and therefore it is a fundamental that will control your strategy choice. For certain strategies to work, the existing financing has to be suitable to that strategy. And what are your finance options as a buyer? Every buyer's circumstances are somewhat different because of the issues with income, credit, and debt to income. Some people owe more. They might have good cash and good credit, but they may have a lot of debt. Some people are debt-free, great cash, great income, good credit. No problems for them. They've got a lot more strategy choices. When you are a person that has cash or good credit, and or you have the ability to use someone else's cash or credit, you have much more choice of strategy because you can choose from a wider variety of properties. But if you don't have cash and good credit, you need to focus on specific strategies that cater to the so-called no cash, no credit type of transaction. And so therefore that's going to limit your property choices to those properties that fit that specific type of strategy. And that's where the fundamentals come in. You have to know what the financing fundamentals are on a particular property so that you know whether or not that property is a candidate for a no cash, no credit type strategy. And on the also some other finance options. It doesn't have to be your cash or credit. A lot of times when people say you can buy property with no cash or credit, what they're really saying is you have to have cash or credit. It doesn't necessarily have to be yours. Another option is seller financing. Sometimes the seller's willing to finance the property, and maybe it's a desperate seller that's motivated by a bad situation. But in my experience has been that it can also be a seller who's just simply in a position to do it. And maybe they're willing to do it. Maybe it's not a distressed situation at all. They've got extra money. They're looking for a way to generate some extra income, and so they're willing to finance the property. Working with investors who have cash and credit is a great way to get started in the business when you don't know what you're doing. If you take some of the courses that we offer on Realty Biz Consulting so that you can learn how to qualify property properly, and then go out and work with investors and investment companies, you can make money by finding properties for other folks who do have good cash and credit who want to buy property. And that's basically how I broke into the business. I initially worked for several years with investors who really taught me the business because I had the ability to go out there. I had studied quite a bit on my own, and I understood what they were looking for in terms of being able to go out and interview the sellers, find out what was going on with the current financing on the property, examine the fundamentals, if you will, and then take that information back to those investors and say, okay, I think this property would be ideal for rental. I think this property makes an ideal rehab. We can fix this up and sell it at a profit. So I was able to work with a large number of investors who had the cash and the credit. So I was able to make money initially in the real estate business working with investors and investment companies by helping them find property. But again, I had studied and learned what I needed to know about that, and that's something that you can do here with us at Realty Biz Consulting if you're new to the business. It's important to know what type of property you're looking for, whether you're working for investors or whether you're someone who is in a no cash, no credit situation where you're trying to find a property for yourself without having to qualify for a mortgage. It's important to understand how the fundamentals work with the strategies so that you can identify what you're looking for. You can't find something if you don't know what you're looking for. Now, seller motivation is also a big fundamental, and it ultimately boils down to what does the seller need? What are they trying to get out of this transaction? What problem are they solving? Are you searching for properties or for sellers? If you're in a situation where you have no cash and no credit and you need to find the right kind of deal for you to be able to buy a house for yourself without qualifying, or you're looking for properties for investors, you're generally looking for motivated sellers as opposed to property. That is, sellers who are in a position to be flexible, have a desire to be flexible, or have a need to be flexible. They're in a situation where they really don't have a lot of choice. So really, in many cases, you're looking for motivated sellers as opposed to just property itself. Then once you find those sellers, you have to determine what it is that they need. One example I can give you is one time I did a deal with a girl who contacted me about a property that she was trying to sell. And it wasn't that she just wanted to sell the property, but it was because her father was very ill and she wanted to move back to Florida so that she could, quote, bury her father in Florida. That was where they were from, and she had a house in Atlanta. And when I went to see her and visited the house, he was literally in bed in one of the bedrooms, very ill. And what she needed was a quick sale on that property so that she could move. Fortunately, they had quite a bit of equity in that property, and I was able to make a deal that worked for both of us, and she was able to sell that property quickly and move. Sometimes sellers need to just get a property off their hands for just the plain reason that maybe it's just an older property. I had one time that I sold with owner financing to a buyer who did not have to qualify for a new mortgage, because I needed somebody that would move in and fix up the property. It needed quite a bit of work. It had been a rental property for years, and once the tenants had actually passed away, the property needed quite a bit of work. So rather than do all that work and pay a lot of money to have all that work done myself, I owner financed the house to a couple that had the ability and the willingness to do that work themselves. It was a win-win. I didn't have to spend any money fixing up the house, and the couple who couldn't qualify for a mortgage on their own and had two small children and were living in a very small mobile home, they were just ecstatic to get a house. So they were more than happy to do the work that needed to be done. So it was a win-win for everybody. When you have sellers that have equity, as I did in that particular case I just mentioned, it gives the seller a lot more flexibility. So one of the important fundamentals that you're looking for is how much equity is in the property. Sellers who don't want their property. Once bought a property from a guy who was basically a drug addict, but he had inherited a house from his parents. And he was so interested in getting drug money that he didn't want the house, he wanted the money. And he was going to move into an apartment. I tried to counsel the guy and said, hey, what do you mean you want to get rid of your house? I mean, you still need a place to live no matter what. He said, yeah, but I really want this money to do other things. So, hey, he's going to sell it to somebody. So, it's funny what motivation can be for some people. A lot of times there are children who inherit property that have their own house already, and they don't want the property they inherited. So those can be ideal sellers in some situations. Sellers who are underwater, who owe more than their property's worth, are very common today. And there are strategies, such as short sales, that can be implemented for sellers in a situation where they're underwater. But a lot of times these folks that are underwater don't really know what to do about their house, and a lot of real estate investors don't always realize that there are things that you can do to turn a property like this that has too much debt on it into a property actually that does have some equity. But short sales is one of the more common ways to do that. Some sellers who can be flexible will be flexible. I did a deal one time with a gentleman who was a very good real estate investor, a very successful developer. He had a property that I was interested in that he had just so happened he didn't know what to do with, and I did. I went to him and we made a deal for a lease with an option to buy, and I started a business on that property, and after I got the business going several years later, I exercised my option and bought the property. And he did it just because he was willing to be flexible, not because he was desperate for money or was in any kind of bad situation. Sometimes sellers have properties in poor condition. Sometimes the seller themselves are in poor condition. I have bought folks from houses who were selling rental property because they had health problems and were no longer able to take care of it. Sometimes a seller just wants to get rid of a property because they've got bad tenants and they're just tired of dealing with tenants. Sometimes they have other debts and they've got property that they just need to sell so that they can satisfy other debts. But seller motivation is a very important fundamental that often gives you a very quick read on whether or not you're going to be able to make a deal. Because if a seller's very motivated, you'll often notice that right off the bat. They'll be very cooperative. You'll be able to get a lot of information very quickly, and oftentimes that's a very good indication that that property is a good candidate for a deal. Now, real-time market value is a term that I coined back during the housing market boom for what a property was likely to sell for on the street versus what the appraisal said. The problem that you run into with property is if you just buy based on appraisals, you can either, in the current market, it's not quite so bad because appraisals are so conservative today that generally you might even sell the property for more than what the appraised value is. But in the boom years, especially 2005, 2006, and 2007, you would often get a real estate appraisal for, say, $300,000 on a property, and in reality, when you went to sell it, you would find out that you couldn't sell it for more than, say, $250,000. And as time went on, from 2005, 2006, 2007, that became more and more of an issue. And so I use a technique called dollars per square foot averaging that is not all that complicated really, but it allowed me to determine what real-time market value was based on the most recent sales in a given neighborhood or subdivision as compared to what the appraisal might say. You know, property fundamentals in general, each property is unique. And each individual property has its own separate set of fundamentals, its own location, its own condition. Each seller is different. Seller motivation is generally different from one case to the next. Only certain strategies will work on a given property. So it's not a matter of learning one strategy and then going out and trying to apply that to every property you see. The trick is to examine your fundamentals and let the fundamentals dictate your choice of strategy for a given property. If you do it that way, what you'll find is that you can take more different types of property and apply more different strategy choices. So as a real estate investor, it gives you a much wider operating range and a much greater ability to convert situations into deals, because you know how to apply different choices of strategy to different sets of fundamentals. When you study one strategy and take one strategy-based seminar, all you understand is that strategy. And then you find when you get out on the street, you don't really know what kind of fundamentals you're looking for that particular strategy. So if you're struggling with a particular strategy, it's probably because you don't really understand the fundamentals that match that support that particular strategy. I am Realty Biz Consulting. I'm the director of Realty Biz Consulting. My name is Donna S. Robinson. Our website is realtybizconsulting.com. We do training, education, and coaching services for real estate investors. And we have programs for beginners all the way up to advanced investors who are looking for property and investment opportunities. If you would like, you can join our email list for more great information and training. We notify you on when we record new videos, consulting calls, coaching lessons, things of that nature. We send a lot of that information out for free to folks on our email list, and we also let you know when we're doing any specific live events or training events that you might be interested in attending. And if you're interested in advanced coaching, you can contact me directly at 888-915-9968. That's a toll-free number. And I'd be glad to talk to you personally and discuss whether private coaching is right for you. I do use an informal screening process for that because some folks need beginner-type training and they just need to do some good quality home study to get themselves off the ground. And some folks have a much higher level of experience and really can benefit from hands-on coaching from somebody who knows the business. And it's not just myself. We have a variety of expert coaches that specialize in different aspects of the industry. And some of those folks are even available depending on what your budget is. We've got folks that are available to come to your location and work with you specifically in your market. We also do teleconference type coaching. And monthly, we're working on a monthly coaching program, group coaching, for those who might want some good training from experts that you can talk to and be able to learn from without spending a whole lot of money if you're on a very tight budget at this point. So check us out on the website, and here's some more of our contact information. The website is realtybizconsulting.com. On Facebook, you can look me up as Donna S. Robinson. My business page on Facebook is Realty Biz Consulting. On YouTube, we're Realty Biz Consulting. On Twitter, Donna Consults. Google Plus, Donna S. Robinson. And on LinkedIn, Donna S. Robinson. So I hope to hear from you soon, and let me know that you've seen the videos. Thanks for watching. And the next video in this series is Real Estate Investing Strategies. And I'm going to tie this all together by discussing the most common real estate investing strategies and how the fundamentals support or undermine those strategies. And I'm going to go into some detail about which fundamentals support which strategies, so that if you're working with a particular strategy, you'll have a little bit better understanding of what fundamentals you need to be looking for out there in the market. Thanks for watching, and have a great day.